I listen. I was watching Trade Masters last night, Frankie, and I was watching Tom talk about it. Well, maybe it wasn't during Trade Masters, but after Trade Masters when we were hanging out in Discord and we were talking a little bit about. I'm just going to go first if you don't mind. By the
No,
way,
no, go right
Frankie.
ahead.
But I was going to ask you a question. What are your thoughts on FXI here from a pure technical perspective?
Yeah, I thought that was an interesting point that Tom brought up, and I kind of like it. I was kind of debating them versus Baba. I
Uh-huh.
personally, I
Now,
kind
now
of
FXI isn't my pick,
okay. So
but
you're just looking in that
yeah,
space.
yeah,
I
but
think the ideas behind it is there. I do think you see the grind up. Like I said, it might be volatile. It might
mhm.
not be the move that we've seen in Staples over the last several weeks, but I do think it's a place of interest. I'm interested personally.
Well, I'm looking at Staples, and my general opinion of Staples is it's amazing, but it's overextended. My general opinion of healthcare is it's okay, but it's overextended. By the way, those are just my general opinions of those two sectors in general. I typically do prefer Staples over healthcare from a defensive, and I'm not trying to say one versus the other. That's just kind of my bias. But both of them are a little bit overextended right now. I'm looking at the areas of the market that are not overextended, and certainly flags are part of that overextended, but I don't have FXI as a flag here. I have FXI as a traditional bullish retracement,
Yes.
and I also like it at that 200-day moving average. In my comment yesterday in Discord when we were talking about FXI, by the way, the Discord hangout session yesterday was popping.
It was real
Really,
fun.
really enjoyed it. But my thought process was, hey, let's get some slowing momentum here. Let's get a doji. Let's dial in that support level. And we got more than that today. We got an upward movement in price that can easily be argued for confirmation. Now you got some overhead against that right underneath 2950, obviously with the 50 period moving average that you do have to navigate a little bit, but it's not like the 50 has played that big of a role in FXI. It's just something to give a little bit of consideration. And Frankie, I don't know. I don't know if Bob is going to be one of your picks, but I was looking at Bob and saying, man, Baba looks really, really good right here, coming in off the 9 EMA, but Baba's not my pick either.
Okay.
My pick's a little bit more complicated of a setup here.
Oh, all right. I
And
like it.
and and I'm going to go with XPEV here. XPV,
Oh,
auto
nice.
manufacturer, consumer cyclical component. It's an aggressive, it's more of an aggressive stock like most of the Chinese ADRs are. But what I like about it is I like the front running approach here. And I'm not saying it reminds me of PLTK, but it kind of reminds me a little bit of PLTK in the sense that a longer term reversal is happening here. Now, PLTKA was my pick of on rapid fire for 2 consecutive weeks in the last 2 consecutive weeks. I hope you're watching rapid fire,
It
guys,
might be for a
because
third.
this was it might be for a third. I love what is happening here. But I just wanted to throw out PLTK a little bit in the conversation there, Frankie. But when you're looking at XPEP here, what I like about it is you got an increasing in resistance, and that increasing resistance is coming right into the overhead of the intermediate resistance levels. That's that intermediate neutrality. That's that time reversal we're seeing play out a little bit. And then what you have is you have a bullish retracement that is very similar to what we're looking at on FXI, but it's coming into a pretty important number right there in that $10 range. That's the second thing. So I like the momentum in the short term trend against the backdrop of the intermediate trend. I like where the retracement came into that $10 number, a significant whole number. I like the wick action here as well. The wicks coming in off the lows both days, coming in off the lows both days. I like that as well. When you're looking at this from a short-term daily chart perspective, that's just a bullish retracement in a bullish uptrend is what you're looking at. But when you come out to the weekly chart here, Frankie, you see the neutrality I'm talking about, and you really see that overhead. Excuse me. You really see that overhead right there at about 1180, kind of get dialed in over the last 2 weeks. And so this is not a situation where you're like full position, right? You're underneath an intermediate resistance level in a reversal situation. that
Right.
would obviously be a little bit more of a scaling in approach, front running type action into what could be a really good weekly reversal breakout scenario down the road a little bit. And so I just like the increase in support. Now, Frankie, I don't like it enough not to put a stop loss here. And I don't like it enough not to put a stop loss all the way underneath $8, for example. We're going to choke it up a little bit, and we're going to tighten it up against that price action right here, saying if the bullish retracement doesn't work out, we'll take a cheap risk type scenario. Even if it does end up going, crazy down the road a little bit, that's okay. We're just going to take a little bit of a cheap risk type scenario. Entry above the high here, Frankie, getting it above that 9 EMA. Stop loss underneath this cluster of moving averages right here in that 960 area. Target one has to be in the 1170, 1160 area, but then it opens up into target number two because you open it up into something that doesn't really have any major resistance. You got a little bit of 13 that I'm discounting just a little bit, but it really does open up into about the 15 area. And so again, just looking at a little bit of a reversal here, front running action, and it's an aggressive trade trying to play off ultimately technical value type argument, but just trying to play off that bull flag.
Yeah.
Looking at the bull retracement on XPEV, what's your thoughts?
Yeah, I like it. And I think this is a prime example of the scale into the breakout.
Yeah.
Right. Where you have a legitimate retracement that's purely tradable kind of on its own merit, and a legitimate resistance level. Hey, if it stalls, if it can't break that, nobody better be surprised, right? Like it struggled there multiple times.
Yep.
Even if it does, though, because of the way you've structured the trade, good, right? You had a decent little trade. And yeah, I like that. I think that's a good call in that area, as a matter of fact.
And you can't really expect above 1170 12 here. It's pretty important resistance zones, but my point is it's still a good trade even into those levels.
Yeah,
it gets a good trade above those levels.
The thing about the scale in that I is kind of underappreciated, I think, is it gives us that confidence because we're playing a little bit with the house's money when we get that breakout, right? Maybe I don't have to wait for it to consolidate for 3 days while the 9 catches up like I would if it was a fresh breakout, right? I'm playing a little house's money. I can get an order in right above that and let it be. I like it. I like it a lot.
Awesome. What's your first one?
Listen, I can't not do this. I threw this in the Slack in the Discord this morning because I ran into Rambus today, and it got me thinking about Kurt Rambus, the old basketball player in the Lakers. Always one of my favorites. My uncle looks just like Kurt Rambus. I used to call him Uncle Rambus. One of those interesting ball players. But the chart is what stood out to me. On Rambus here. You recently had a really nice break on these guys. I mean, it's a tough one to catch if you weren't right there, right? But very, very clean breakout happened about 46 there. Big pop, mellow drop, right? Always nice, nice to see. Because if you didn't get in day one, basically you probably didn't have a chance. We had a chance, but you probably weren't all keen on that chance, right? You probably were waiting for a secondary pattern. And well, we have one working back into that 9 EMA here over the last couple of days. What I like about these guys, obviously, that beyond that, it's kind of, what Mark was talking about intraday earlier. If you look at this on your hourly or your 30-minute, you've come back down into that support level. You've got that potential double bottom forming. Getting through that high from yesterday would be a little bit of a confirmation of that, at least for me. So I think you're looking at these guys as it is right now over that Thursday high. Yeah, you could probably, make a case to go in over today's high on Monday. But I mean, that costs you like 15 cents for what I believe is pretty decent confirmation on that intraday. If it was another $1, I would think maybe a little bit differently, but I think you pay for it when it's cheap. So I want to see that. Assuming we get that, stop loss is just going to go below this low right from here today. If the momentum stalls, I don't want to be stuck holding. I want to roll with the momentum if it wants to roll, and if it wants to kick me out, well, won't be the first, won't be the last to do that. So kind of looking at entry over Wednesday high and stop loss under today's low going into next week. Now, maybe we don't break that high on Monday and we do it on Tuesday. Well, hey, that's still perfectly fine, right? I do think as long as we're kind of hovering above that 9 EMA here, this roughly structure of the trade is going to make some sense. From a targeting point of view, I mean, clearly, easy target to 52 for your first target, right? I mean, that's just where we were a few days ago. It's clearly not an area that it can't get to. I think that makes a lot of sense for T1. When we get into T2, it's a little bit more, your evaluation is as good as mine, right? Because these are high water marks. We've not had to deal with these before, at least not, I don't believe ever, but certainly for a heck of a long time, if ever. So just kind of looking at the way that these guys
makes
move,
sense to me.
I was kind of thinking going into the 54, because me, I'm usually a little wimpier on my second target, unless it's moving average base, and then I'm usually more aggressive than you on my second target. I was looking at 54, but I think 55 could make sense as well. Either way, the thing I love about 54 is that's going to put me somewhere at about in the ballpark of 3-1 on the risk to reward, right? Even better at 55 if that's where I'm trying to go. My point isn't, that one's inherently better than the other. One's easier than the other, right? 54 is easier than 55, but it is to illustrate that we do have a good risk to reward setup because, hey, maybe Mark looks at this and says, you know what? 53 guys, quit being so brave. It's still going to be well over 2-1. So it gives us some flexibility on that secondary target. But I personally like 54 as T2.
I like it, Frankie. I like the flag here, kissing off the 9. That's what you want to see. You want to see that turnaround story, doji, upward moving in price, stop loss, like it. And when you're in a trend and you're at an all-time high, it is a little bit of best guesswork on that secondary target. 54, 55, either one. If someone came to me at 54 and said, hey, I'm targeting, I would say, hey, good target. If they came to at 55, I'd say, hey, good target.
Yeah.
They said 53, I'd be like, coward.
But good target.
And if they said 50, and if they said 56 or 57, I'd be like, oh man, a little too aggressive there. 54, 55 makes a lot of sense to me there, Frankie. Right. Let's move on from Rambus here. Kurt Rambus was fun to watch.
He was
way back in the day, but he was fun to watch. He was he was gritty a little bit. I liked him.
He was an interesting character.
The goggles, bro.
The goggles. Of course it was the goggles, right?
The goggles, dude. All right. I'm looking comms here, and Google, obviously we talked about it a little bit. Nice little breakout, ongoing situation. It was a great trade from last week. Let's see if we can get some follow through here on Google, not just from today. Today looks perfect on Google, but look at that weekly action on Google now, fighting on that weekly. Let's see that break and let's see that run. That is tackle 25 Google. That is Google from the scouting report just last week. Google looks really, really, really good here. So I certainly think you could bar by bar Google right now, even on the breakout. I do, but I just feel like the trade was earlier this week, quite frankly. But again, dial in that resistance. Maybe we can do that dance next week as well. So I want to look a little bit elsewhere in communications, and I do think there's quite a bit of communication stocks that are setting up, Frankie. You got a stock like Siri under, Mark was talking to me about trash that makes cash, and he wants to bring back trash that makes cash. This is my type of trash that makes cash, a name like Siri. Good little 1, 2, 3 V-shaped recovery above $4 looks good. Weekly chart needs a little bit more work, but nice little reversal happening here on Siri. That is not my pick though. New York Times, when you're looking at the Times here, it looks pretty decent. It looks pretty decent as well. Look at that little breakout potential on the New York Times there. I'm looking a little bit elsewhere within communications though, Frankie, and I'm going to pull up a name that I don't want to because it has 5 symbols in it. I hate myself for even pulling it up because it has 5 symbols, and I am anti 5 symbol stocks. But I like Comcast here. Yes. When I'm looking at some of those other stocks like AT&T, they look pretty healthy. But what are you going to do with AT&T at this point? Number one, it's not a great swing trading stock in general. Number two, it's overextended. When you're looking at Verizon, these are just some of the same type of names out there. Verizon could look a lot better here in a second. But when you're looking at Comcast here, Comcast has a really good four-day high base here, and it's coming off a little bit of a short-term reversal. And so I just like it dialing in this high base right here. And then when you're looking at that breakout, again, coming into the intraday analysis here, a little bit choppier than what we're seeing, but you got a couple breakout channels you can look at. One right there at 38.10, secondary right here at 38.30. I like the 38.10 here, Frankie. I like a little bit of more aggressiveness. I'm discounting that wick because there's only one wick there where I got a lot of evidence right here in the 38 to 30 at 38.10. That's kind of one of those conversations we constantly have. Do we take advantage? Do we take into account the wick, or do we take into account the bodies here? Because the evidence is more on the body side of the equation, I think we take into account the bodies more than the wick. And so at 38.10 right here looks like a good trigger. Underneath the 90 MA, you're really just playing the base here. Entry above the base, stop loss underneath the base, and the target is really, really simple. We're targeting 40 by 41. I don't got to talk about anything that it might hypothetically go into because we got recent price action at 40. We got recent price action at 41. What's your thoughts on Comcast here?
Yeah, I thought they were. I was bringing them to our discussion in the scan report meeting as well. I thought they were one of the cleaner ones going into next week. I think it's a perfectly legitimate way to play it. I was also thinking XLC is a legitimate way to play it. That's pretty darn clean. Too. But I don't dislike Comcast at all. I think that's a very reasonable way to look to take advantage of this space.
Yeah. All right. What's your next one?
All right. So you went comms. I'm going to go to Echo Labs. I like it. What I'm seeing on ECL.
I was looking at Echo Labs as well. It's one of the better basic material setups right now because gold's overextended.
Yeah, it's really clean. You got a really clean high base that we're just now pushing into the top range of. What I love about this one, Maddie, is we've got open air to 175. I'll call it. Right. We got a lot of price action in that 175 range, an old support level going back into last April, resistance, last June, got technically above it, but danced in there throughout the late summer, early fall. My point is we've got some history in that 175 range, but you tell me what we have between here and there.
On the daily chart, you have absolutely nothing. On the weekly chart, when you break up, there's no pivot formations. I mean, maybe 170, but that's more of a wick on a weekly. I don't see anything until mid 170s, 174, 175.
Yeah. And that's also, for what it's worth, where you're going to find approximately the 20 monthly moving average. So a really nice pocket right into that
range too. Yeah.
Right into that 174, 175 range for us to work with. So nothing in our way. Already established momentum. Technically, heck, we broke out. It was not the type of breakout you and I love to trade, right? But this was a breakout, last week at this time, right? Breaking through that horizontal resistance level. We just would have said we don't like breakouts that are coming. It came too far, too hot off of support, right? Yep. We didn't get that consolidation that we want. Well, now we did. Now we've got that consolidation. Heck, we can get it for about the same price today as we could have got it on Thursday when I know us. We both would have said that. I guarantee we would have said that. So it's very easy to still like this thing.
9 EMA kissed off the bottom price.
Kissing off of the 9. So you got a really good stop loss location, getting that 9 and basically the low of this base, basically, right? You're able to get a really, rock solid, at least one rock solid stop loss option. Put you, using kind of that, kind of yesterday, and basically the low of this week, yesterday and the day before. Underneath that gets us the 9 for your stop loss, targeting into that 174, 175 range, basically just getting above these highs. I think it's like 166.74, if my memory serves, is the high water mark, but that was earlier. So we'll just call it over today's high. Nothing too crazy here. Looking to target into 174, 175. And then because there's nothing, Matt, I'm just going to say target 1. What's going to be 1-to-1? And depending on exactly how far above and below you are, roughly that's going to put you right about 170, right? But
it would be a legit too. I mean, you got a little bit over here, and it makes some sense, Frankie.
So I think that makes sense. And if it's, if the way I've got the trade structured, my stop loss is a little lower and I'm not 1-to-1 at 170, honestly, I'm fine going to 171 if I needed to do so, because it really will be just over 1-to-1 for my first target. Because this is one of those trades in my mind that T2 is T1, if that makes sense.
That's the well,
That's the
I
real
honestly
target,
was
right?
going to say, I was just going to say, literally, I was going to be like, yeah, but 175. When you were talking about 170, 171, I was like, yeah, but 175 is the real target, right?
Exactly.
Yeah.
Exactly. So it's mostly to take some action, to do a little scale, to move stop, both, whatever, we like to do. I do think even if T1's not my quote unquote real target, you always want to have it, right? Because you need to be forced to take action. Otherwise, I'll be indecisive and have that worthless debate, right? Waste a lot of time on something I don't need to waste time on.
Yeah, I like it here, Frankie. When I was looking at materials earlier today, I didn't find a lot of setups right now in materials. Despite the fact that when you look at this sector, you kind of like what's happening with the sector here, right? You're in a little bit of a pinch here, but increasing upward movement in price here, higher level of resistance, nice little flag into the 9. It's a little bit choppy because of the intermediate neutrality, but I kind of like, and you would assume you'd see a little bit more charts that look like this. But with what was occurring in the cyclical areas of the market, create a little bit of additional volatility. And then what's been happening on gold with that massive upward movement in price on GDX. Let's just go ahead and take a look at GDX very quickly. That is extremely overextended at this point on GDX. There's no gold stock setting up right now.
Yeah.
There's not a lot of silver stock setting up right now. You have a couple out there, like Rio looks a little bit better, coming in a double bottom, increasing support. That's kind of interesting here. But outside of Rio, it feels like the specific metals area of basic materials needs a week to kind of reestablish something, because it's just been really, and again, it's just been really too good,
right?
It's just really good. And so it's kind of needs a week to settle in there. I like Rio. But Ecolabs really stood out to me earlier today. Same thing with WRK a little bit, coming in off those lows. Keep an eye on WRK. They're doing a little bit of the same reversal there as well. Frankie, my last pick, I like your pick, Ecolabs, quite a bit. I've been debating this last pick here, Frankie. There's a lot of really good flags. There's a lot of good bases out there. I'm going to go with, and I don't know if this was your third one. If this is your third one, I do already apologize, but I know I do know you got more, but I'm going with Akamai here, Frankie.
It's a good one. You made my choice easy then. I was debating between them and one other, so you made my choice for me.
I knew you were thinking Akamai, and so I didn't want to steal your thunder, but I'm sitting here debating 4 stocks, and I know Akamai is better than the other 3. And so I was just like, I'm doing it. I got 3 flags that look all like Apple, or I got Akamai. I'm going to go with Akamai here. What I like about this, Frankie, is really simple. I like the pinch developing here. You're coming in off a little bit of a reversal, and now you're just staring down the barrel of that 50 period moving average right there. Real good constructive price action. Look at those 3 inside bars kissing off the 9.
Beautiful.
That's just no volatility there at all. Upward movement in price, flag into the 9, not even a flag. It was 3 inside candles, Frankie. We got 3 bullish Harami candles back to back to back. That's like back to back home runs out there. I just like the way this pattern is shaping up in between the 9 EMA here and the overhead of the 50 there. And then when you come out to a little bit of a multiple time frame, you see what we're looking at. You got this pocket you're working into on the weekly chart where you just broke up against the 9. Now the next destination is kind of into that 20 SMA. I do think 80 plays a little bit of a role there, but that's an old support, the new resistance level. I just like this breakout here, Frankie, quite a bit. And I do think you're targeting 82.5 T1, 85 T2. Stop loss would be right underneath the base, probably south of 77. Entry above, I think you go entry above the high. I'm certain we're going to prep this trade in the scouting report meeting, though. So the full prep work will be done a little bit later today. And it might be one of those situations that we had last week, Frankie, where you and I you and I are the ones that do all the prepping work, right? In the
Yeah.
scatter report. And so what happens, guys, is we get all the picks from all the coaches throughout Friday. And then me and Frank curate this massive scouting report that will have, sometimes in earnings season, it might only have 30, 40 stocks.
Yeah, that's a nice thing about earnings season.
Yeah.
That we get done early.
We do get done early.
It's the only
There's
nice
no doubt
thing about it.
But outside of earnings season could have 100, 150 stocks, that depending on how many, well, quite frankly, depending on how many you and I want to geek out on. But all the coaches submit their picks. Me and Frank and Mark and Gino will basically curate all the picks early on. And then the coaches will join us later on in the scouting report meeting to finish up everything. But in doing so, me and Frank are the ones that actually does all the prep work. And so me and Frankie will dial in targets, entries, stop losses. And we typically get there about an hour in front of the close is where we typically get to start prepping some of the plays. Last week, about 15 minutes before the close, me and Frankie's like, all right, new entries on everything, right? New entries on everything, because the market just started going up, 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 up. And so it could be one of those scenarios today where, you know what you're looking at as an entry right now could change by the end of the day. But I do think you're somewhere above the high here, as long as that's above the 50 period moving average. And so however you see it, I like the pinch, like the recover here, and just playing a little bit of that catch up to 82.5 by 85. What's your thoughts on Akamai?
Yeah, I love these guys. It was a really good choice. My only complaint has nothing to do with you. I would have maybe liked a couple more days in that pinch just to get it a little tighter.
You want to get a perfect pinch.
I want a pinch. I want a pinchy pinch, right?
But asking for a perfect symmetrical triangle or
it doesn't hurt to ask,
is
right?
A big ask. Though.
You just can't expect. You can always ask for it, though.
Ask.
But yeah, I'm with you. For me, the only real difference, in the approach would be my personal entry rules on moving average breaks was I need to see it close above the 50, and my entry would be above that. But that's again a personal rule.
That could,
and I know some people share that. So it could, absolutely. Don't. How about this? AKM Doji on Monday, right below there. Creep up a little bit more and then go on Tuesday. But yeah, this was it was between this, and I was probably going to go with them, to be honest with you, Maddie. And who I'll officially go with, because I wanted to give some different looks here today, because like you said, there's a lot of things that look very similar, right? All the energy stocks kind of, not all of them, but most of them look the same. Most of the financial stocks look the same. A lot of the tech looks the same. So trying to find things that a little different view, and so I'm going to go with GEN. And I'm going my bear stop out trade. I kind of put it in I threw it in the step channel over on Discord if you want to check it out, because this is a specific trade. We use the term bear stop out a lot, and rightfully so, but I also have what I call my bear stop out trade, and that's exactly what this one is. It kind of fits into that, so I kind of explained it a little bit, at least I hope I did, over in the step channel if you want a little bit more on it. But in a nutshell, Maddie, big downward trend, rallied up. Clearly the bear started getting back into this thing at the end of March, right? March 22nd, that's a big candle. Downward movement on the 23rd, confirmation. Downward movement on the 24th, more confirmation. Somebody out there, understandably so, was building bearish, a bearish entry on this, right? That week there on March 22nd, 23rd, 24th. Ends up forming a little support level. Yeah, that's fine. These things don't have to go straight down to, the old support level, although, we prefer it if we're bearish, right? Takes a run. What slowly starts to happen here, that 9 starts smirking at me. Then he starts smiling at me. Then he crosses over the 20. About the same time, we're actually taking out that high from I guess that was the 21st? Yeah, Tuesday, the 21st. Ended up taking out that high, while that 9's pushed just up and up and up, right? So we're kind of seeing that bear stop out in motion. So that's kind of the idea behind the entry, and kind of why I like this type of this type of a setup. And I created my own rules and name for it, I guess, if you will. Mm-hmm. The next thing that's important is, windows, right? These guys don't really have a lot. So you've got really clear moving average windows. You can have the 9 weekly. That's going to put us right about 18 and a quarter. Don't quote me exact, but about there. And then, of course, the 50-day moving average. So you got two windows. You don't have old price action to worry about in this particular case. So you've got two windows. Right. The first one's the biggest one, right? Unlike, ECL, where T2 is the real target, T1's probably the real target at 18 and a quarter here on Gen. Personally, that's how I would target it, though, Maddie, is kind of using either price action or moving averages and whichever, comes first, basically. Entry at this point in time is basically just over today's high, I would say. And then stop loss, the number one rule, you got to be below the 9 EMA. There's no discussion on a bear stop out trade as far as I'm concerned. You don't have the option. You have to be below the 9 EMA. But what you really want to be below is the developing trend line, right? And it's not super clean on these guys, but if we connect the lows from the 15th of March into the 24th of March into basically the whatever Tuesday was, we're kind of getting an idea of where that trend line developing is, right? So ideally, I want to be below that so I can kind of let that play out and work for me, as because I don't expect this to be one that just fires up, right? Unlike, a Rambus that, sometimes momentum just goes crazy when momentum's already in play, right? I don't know that that's what I expect in something like this. So I do like to give it a little bit of wiggle room. So I like a stop loss below that. I think we could probably just say that's right about at the 20 right now to give it a number below Tuesday low. But that's kind of the way that I kind of think about stop lossing those guys. So figured I'd use this one since it was a pretty good example of my bear stop out trade patterns at least. And I do really like the target into that 18-20 range where we are running into that 9 weekly. We'll reevaluate from there. I would expect some downward movement at that point. How much is the question?
Like the reversal here. It's an aggressive reversal, but we got a few reversals in Frank's charts here today working, and I'm excited to see them play out. If you like Frank's charts, guys, you will love the scan reports as we dial all of these picks in on our watch list every week.